All right, hello everyone, and welcome to our final and fifth video in our series of equity and efficiency, where we're going to be talking about the role of markets in efficiency and equity, and also what the government does to intervene in the market to try and make things more equitable, or in some cases make it less equitable, because why not? Let's cause some more separation in society. So hopefully you remember a lot of the things we've gone through so far. The types of efficiency, allocative and technical, the Gini coefficient and the Lorenz diagram and what they mean. All of this is obviously going to be important for whatever assessment you have coming up shortly after this. So let's get into what we're looking at today. So like I said, the role of markets in the achievement of equity and efficiency, as well as budgetary policy decisions on the achievement of equity, efficiency, etc. And we'll get into some specifics there. So the effect of certain taxes, unemployment benefits, and subsidies. So to move straight onto the roles of markets in achieving equity and efficiency. So hopefully you remember from Unit 1, Area Study 2, when you looked at supply and demand, markets are institutions where goods and services are sold, and they work based on the price mechanism. And what that means is basically the more demand there is for something, the higher the price is going to be. Or the less supply there is of something, the higher the price is going to be. And so this means that many things, such as the rates of pay in specific jobs, are decided by factors of supply and demand. And you can see that pretty clearly. So for example, why are retail workers paid less than marine biologists? Well, marine biologists are less in supply. They've got to go to university, do a long degree to then study marine biology, like the background image here. Whereas a retail worker, you put in a resume, and if you do well in the interview, you've got enough experience, you're hired. And that's why the rate of pay is a little bit lower than it is for a marine biologist. So we usually use the example of like a surgeon, why they get paid so much, or a rocket scientist, or all those kind of things. Higher pay rates tend to deal with a more difficult job where there is less supply or more qualifications are needed, or there is a lot of demand for it. So in Australia, during the mining boom, mining is a job where you do not need that much experience to just be someone in the mines, but the pay rates were obscenely high because they desperately needed the workers, because we were exporting that iron ore to China. And so that meant that people were getting paid insane hourly rates to fly to Perth or Western Australia for a week at a time to work for 7 days straight, and then they'd get flown home, and the flights were included in their deal for their work, their contract of labor. And because there was so much demand for that labor, it paid quite significantly high. And so that's really important about how markets can help determine and why things aren't totally equitable, because of the fact that the markets for labor especially work on the price mechanism. This can also be true of goods and services. So there's a reason why certain things get produced a lot of, even though they're not great for our living standards and aren't great for equity. So many socially undesirable goods and services are overproduced because they're profitable, and this harms our ability to achieve allocative efficiency. So it's hard to maximize society's living standards when you look at, for example, we're in stage 4 lockdown and Dan Murphy's is seen as an essential service because people need alcohol or they won't be able to live with their families, which is kind of a little bit unsettling and a little bit worrying that things like that are seen as essential. But also, alcohol is incredibly profitable, and it makes the government a lot of money through the fact that it is heavily taxed. Same with tobacco, cigarettes, heavily taxed item, and businesses make it because they know it sells. There's a lot of demand for it, and therefore, although these goods and services are produced a lot, they're not great for efficiency because it means that living standards are going to be worse. So like, for example, with cigarettes or alcohol, for example, too, they lead to long-term health issues if they are used in excess. And that then puts strain on the public health system later on. And that then takes up taxpayers' money, which is not great. Alternatively, many desirable goods and services are underproduced because they're not profitable for producers, which once again negatively impacts allocative efficiency. So simple example, so there's a good reason why the government has to subsidize healthcare and education, because if you look at, I always used to use the example of Geelong Grammar. I think it's about $50,000 a year to send your kids to Geelong Grammar, which is almost more than minimum wage for a salary, probably pretty close to it. If every school costs $50,000 per year, which is an extreme example, Back Smash Grammar near me is $20,000 a year. still insane to me to think for VC to pay $20,000 a year. But if education costs that much for everyone, not a lot of us would probably get an education. We'd probably just hang out at home, learn some skills, and then go to the workforce. And this would negatively impact our living standards. So the government subsidizes education because if people are educated, they've got better. It's been proven through research that if people at least get up to a year 10 education, they've got better outcomes in life and their living standards are better because of it, because they need their basic literacy and numeracy to get by. And so if we didn't subsidize education, it would be underproduced. If the government didn't provide healthcare, I think I talked about this in a previous video, but in some countries, well, America, for example, I've heard stories of people who break their arm and just don't get it treated because they can't afford to get it treated. So, and because of that, if it was all privately produced, it would be underproduced because it wouldn't be as profitable. So how the government pursues equity and efficiency. So the government does this in a number of ways. We're going to talk in large first about our tax system, and that being a way that the government pursues equity. And the general takeaway here is that they pursue equity by redistributing income. So basically by taking taxes from certain people, businesses, etc., they take that tax, and about 70% of government spending is on welfare benefits. So that then goes essentially, it's almost like the Robin Hood principle where they're taking from the rich, but everyone, just they take more from rich people and give that back to the poor or the needy or those who need it most. And that redistributes income to make things more equitable. It doesn't make things equal, it just makes it more equitable. So we have what's called a progressive tax system, which is where the more income you earn, the more income tax you pay. So these tax brackets are organized in such a way that low-income earners have less of a tax burden than those of high-income earners. So any of you who are watching this, assuming that you are a student and not an adult, you might have casual part-time work, you might have friends that have that. For the first $18,200 that you earn, you'll get every cent of tax you pay back because your tax burden is zero. We call that the tax-free threshold. The first $18,200 that you earn, you do not have to pay any tax. You may pay some tax during the year, but when it comes to tax return time, you will get every dollar back. And that is because you're technically a low-income earner. Therefore, you don't have to pay tax because the government doesn't need it from you. They need it from the higher income earners. So then as we go up, the more you earn, the more tax you'll pay. So then from $18,000 to $37,000, you pay 19 cents per each dollar. And then from $37,000 to $87,000, you pay 32.5 cents on each dollar. Then 37 for the next income threshold, and 45 for the highest income threshold. So for every dollar you earn over $180,000, you pay 45 cents of that in tax, which is pretty significant. So for most people, when you work it out, if you're a middle or high income earner, you pay 30 to 40% of your income in tax, which is a fairly large amount, but it's being redistributed for a good cause. And so, yeah, so the government can redistribute it. Then we go on to proportional tax systems. So a proportional tax is when the same tax rate is applied to the whole income or revenue. So in Australia, proportional taxes are used for companies of specific sizes. So when we look at small businesses, for small businesses and medium-sized businesses, so a small business in Australia earns up to $20 million in revenue per year, they pay 26% of their revenue in tax. That's it. So like the same, no matter what. No matter how much revenue they earn up to that amount, they pay 26%. If they're a large business, which is earning in the like multi-millions of dollars, they pay 30%. Then if you're a super profits business, which is a special larger one again, they pay 40% of their revenue in tax. That's a proportional tax, so it just means based on how much you earn, you pay this flat rate. And this helps equity because obviously smaller businesses pay less and then they get to keep more of their profit. Large businesses pay more because they can afford to do it, and then that money can be redistributed to those who need it. Then we've got regressive taxes. So regressive taxes are a tax that is applied uniformly, regardless of a person's income. We most often see these in what's called indirect taxes, which is taxes that are placed on goods and services. So in Australia, we've got the GST, which is the goods and services tax, which is placed on goods and services. We've also got indirect taxes on cigarettes, alcohol, petrol, etc. So my example here is, so these are considered regressive because no matter how much you earn, they affect you the same. or you pay the same amount, the burden's the same. So they consider regressive because they impact a low-income earner to a larger degree than a high-income earner. So my example here is a GST is a 10% tax on goods and services. So if you are someone who earns $100 per week, paying 10% extra on $10 of grocery impacts your overall income more than someone who earns $1,000. So it just is a larger percentage of your income, therefore it affects you a lot more. And this harms equity. There are other examples of this, so like female hygiene products, so like tampons, sanitary pads, etc. for a long, long time have had GST placed on them. And this harms equity for females because things that they need to buy, they have to pay tax for, and that then hurts their income. Whereas like men don't have to buy that, so we're better off, which doesn't seem fair. Equity isn't achieved there because that's not fair at all. And then we've got unemployment benefits. So once the government gets the tax, they can redistribute it in this way to try and make things better overall. So unemployment benefits are transfer payments from the government to unemployed persons in lieu of earning an income, designed to allow that person to satisfy a basic standard of living. They're also sometimes referred to as welfare payments. So currently in Australia, welfare has been relabeled as job seeker during the COVID-19 pandemic, and the rate that unemployed people are being paid has doubled to allow them to maintain living standards during the pandemic, as well as stimulate the economy. This is another example of the government redistributing tax from higher income households to those who need it in the lower quintiles. So this helps equity because it helps lessen that gap. If we didn't give welfare to lower income earners, the gap would be massive, and these people would be poorer, there'd be more crime, etc. It would be very, very bad for living standards, very, very bad for equity. So you might have opinions on welfare being doubled at the moment, but it's actually really good. Hopefully it will be good at stimulating the economy and maintaining some level of employment, because these people are then going to buy more, and it will help keep businesses running in a time where the economy has been greatly slowed down. Then lastly, we've got subsidization of merit goods. So a subsidy is a payment the government gives either a producer or a consumer for either making or consuming a specific good or service. And so they place subsidies on many goods and services that provide positive benefits to living standards, and in Australia to help to incentivize households to consume these goods or services. So some examples of this in Australia are the PBS, which is the Pharmaceutical Benefits Scheme, which subsidizes the cost of many common medicines in Australia. So for example, if you're diabetic, insulin is subsidized. So you're not ending up paying hundreds of dollars for your medicine, which could, obviously if your medicine is going to cost a ridiculous amount, it's going to make it very hard to get by, and then your living standard is going to be worse, which makes it hard to maintain whatever illness you have. It's the same with like flu shots are subsidized. If they were not, they would be very expensive and people wouldn't get them. So the government subsidizes certain medicines that are going to benefit society, because that then keeps people out of hospital, which then puts less strain on the public health system. Another example of things that are subsidized, solar panels are subsidized to limit the impact of energy consumption on the environment, but also motivate households to purchase them, as they'll save money on electricity costs, which then betters their living standards overall as well. And by doing this, it helps people make better choices that will help improve equity in the long term. All right, so these have been some examples of how the government intervenes to try and make equity better in Australia, or lessen that gap between high and low income earners. Also some examples of how market helps determine prices and then affects our equity overall, especially in the job market. I hope this has been beneficial to you. If you have any questions at all, feel free to leave a comment below. Ironically, the last video for some reason got recommended by YouTube to a bunch of random people, so I had like 14 comments of just, why was this recommended to me? Hopefully if this was recommended to you, it was useful, and your comment isn't just, why was this recommended to me? Other than that, my email is in the description below. Feel free to email me any questions that you might have. Other than that, we are going to be getting into revision for this topic, so good luck with that, and I will see you next time. Have a wonderful day. Goodbye.